Well, good day, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for Fed Day. It is the 14th of June, 2023. So the Fed came out and I think threw a looper for people. Number one, there is no more skip. We're not skipping. It's a pause. So when you pause, it doesn't mean you're going down. It just means you've paused. And the Fed, the chair, was very strong on that. He didn't say there's no skip. He said we're in a pause. He could have said we've skipped. He didn't do that. Number two, if you look at the dot plot and all that's going with it, the market very carefully is saying that the Fed members think there could be 2, maybe 3 more rate hikes. But after that, the market craters and you go the other way. So officially, we're coming to the end of a rate hike cycle. That is why the stock market tonight, the stock indices, are holding on. Is that super bullish? I don't think so. Number two, this is not good news for the regional banks, and this is not good news for the likes of a Charles Schwab and other companies that rely on customer deposits, and suddenly they've got to compete with higher numbers coming. Let me explain this. Right now, we did a pause. So they don't have a problem tomorrow, okay? Whatever the market's going to do, it's anticipation. It's not that the Fed went up a quarter point. But the Fed said to this, July, said it twice, Mr. Powell. July is a live meeting. Live means we may put up the rate hike. He made it clear there are no cuts coming this year. None of the members saw cuts coming this year. So the naysayers will be there and they say everybody's wrong. That's not right. They're right. There are not going to be cuts this year. Okay, you can do what you want. I believe the Fed. And I think that, over 6 months, they'll make changes. They're supposed to. They're data dependent. And we'll see what that data is. He made it clear that the Fed is not there to help the Treasury. That's not their function. They have no say in U.S. fiscal policy. I couldn't believe one reporter was even wasting his valuable time to ask those questions. If you understand how they work, they're different bodies, and that's not what goes on unless, heard what I just said, there was probably a total disaster, financial disaster happening in America. We're nowhere near that. So you walk away from this, and what do you think? From my money, the 2 10-year curve yield still going to stay strong overall. I don't want to own financials. The XLF, I think, is a problem in the market. I think Schwab's going to end up paying more money. Today they came out and said they're already going to take a hit of 11%. This just guarantees that hit stays in place. But what do you do with these small regional banks that were hanging on, hoping, just against hope, that interest rates would fall? What they did today doesn't break interest rates. So you can get market forces that do, but not the Fed. They're not going down. Remember that. They're staying here the rest of this year. Remember that. Remember that they've entered a new policy. What is that? Do you remember when they started out with 75 basis point hikes? Get a series of those. They stopped. Then you moved to 50s. They stopped. Then we went to 25s. They stopped. We're in a new phase. We are in a pause, hike, and eventually we'll get sideways. I've told you that the Fed will not do anything until they've had a full quarter to view how data is going. Call it 90 days, whatever. Guess what the Fed chair said today? No 1 month. They want to see trends. They need at least 3 months at a time to view things and get a feel. It can be a running 3 months. It doesn't have to be a full quarter. It can be middle of a quarter to the middle of the next quarter, the beginning. You get what I'm saying. But that's what they're doing. This is all logical. I don't understand why people don't get it. And that's where we're at. Labor is still too strong. Their projection is to take unemployment up to 4.1 to 4.5% unemployment. That's full employment by any standard in America. This is what's the unusual 3.5 to 3.7, right? So to go up from here 0.4 of a point, you think that that's that terrible? No. I saw the counter to this in Jeff Gundlach, and he was very good on it. He's a quite bright guy, and talking about how the productivity is not there and what's really going on under the, if you will, under the hood. I get it, but that's going to take time for people to buy into those arguments. They're not there today. What's there today is a stock mania. That he did say, and I congratulate him. Right on the money. Buying 13 days in a row of Tesla straight up, I'll let somebody else want to do that. NVIDIA, I don't know where it's going to end. Nobody knows where it's going to end, but where do you put a stop becomes the biggest problem in it. Declines, they're going to be shallow. You're not going to go down right away and try to fill gaps on these charts. Too big. We're doing an analysis here when you lose an embedded reading, and what happens if you get where the market has to drop X% to hit the objective. And first thing I say is, maybe we throw that trade out of the whole thing because the odds are you're not going to go there. What if it's a 20% number you have to fall? You honestly think you're going to go straight down on a daily chart like that before you get corrections? It can happen. It's exceptionally rare. I don't want to build the technique for that. When I look at Ford, it's still strong. Come on. And Tesla's strong. Why? Everybody caved into Tesla in America. Tesla is the car company. They're the new kid on the road, and if they have a charger that works this way and needs this adapter, that's what's going to be. Now, I'm waiting to see their new cars. They're going to come up, and they have to, because eventually Ford and these other companies will be able to roll out production of really probably very competitive cars. The question is, at what price? And the question is, do they lose their shirt trying to compete with them because they don't have the scale to do it? When you look at where we're at, these are new highs on this move. Come on. Last time you did this up here was February. You've come all the way back. So from the depths of hell, all the way back up here. And look at how the moving averages are just slicing through everything. But where do you put a stop? If you buy it and you want to buy into this support, you realize from where you're at 14, you've got to come down to 12. That's a big move. Don't get me wrong. It's not a big dollar move. It is not a big dollar move, but it's a big move chart-wise because this is only a $14 chart. When I take a look at momentum, it's embedded. So for my money, I tell clients until the market loses that, you buy the pullbacks, you close your eye, you're out if it closes under 79, and you try to get out at the upper Bollinger Band if it lets you in the way that I teach in the enhanced Bollinger Band course. That's how I'd handle that. Schwab, I'm looking to be short now. You've got momentum down. You've pulled in. I think if you get under 53.11, you probably go back to the Bollinger Band. No, I'm not looking for a big breakout. I think you're going to trade within this back and forth, and it can get choppy, so you got to be careful. But there's nothing here except Schwab's got to deal with the upcoming other hikes. And that means each time they go up, if they want to keep those accounts from moving to money market funds or leaving them, they'll go to somewhere that pays more. They got to fight for the deposit. That hurts the bottom line. In UGA, the gasoline fund, I think the pros are already buying right here. Tight stops. I mean, when I tell you tight, real tight, I don't think you want to see this market under the lows that were right there. And that number, let me get to it for you, is 58.77. So I think the pros are nibbling here, like I said, at the 60.21 level, risking $1.50 to see what they can do. Objective up there, and I think that's what they're trying to do. XLF, I am not friendly now from what I see. First off, you're up to all the numbers that say get out of Dodge, the 100 to 200-day average. You are embedded. I would not be buying this. I don't see how the financial services can do well with what the Fed's doing with these rates and possibly another 2 hikes. I understand that coming into today, the mentality, and what you have to understand that, was the pause might lead to a real pause. And the Fed made it clear that that's not it, and that's why you gave up all the gains. Now, I'm wrong if you start taking out today's high. As a chartist, then no, something else is going on. We'll see if I'm right or wrong. In the industrial sector, you have an embedded reading. Now, this is that mania. You went from 95 and you're up 10%. I find it hard to buy after what the Fed did, a 10% rally. Down here, I can see buying, but I have problems up there. So tomorrow's going to be an interesting day. NVIDIA right back through that high. So were you going to come here and fill the gap? This is one of the things that we're looking at when you lose an embedded reading as to how not to take a trade or how to reject a trade, because I never thought you'd fill that whole gap. What happens is you get an area here where you come down. How close do you get to that number? That's a failed trade, like in stocks. Both failed. Identical patterns, identical doing, and it looks like they're both going to re-embed. So let them re-embed. Now, when they lose the embedded reading the next time, my experience has been that when you embed, you lose it, you re-embed, and then you lose it again, you've really lost it. And you typically get a correction of size. Home builders, well, Linn did very well, but do you know the price that they're building homes at? 500,000 and under. So that's important. What else can these home builders do? Home builders, unlike going out and buying an existing home, can do deals with you if they have to. I don't know that they have to in this market. If you looked at the mortgage numbers today that came out, you saw in every category, new mortgages, the refinances, everything that they were doing there, all up, even with rates. Remember, this is a month already where your rates are near 7%. People that have to buy are buying. There's not a lot of supply out there, and that's what's going on. And the home builders that have figured out parts of the market, niches within them, are doing well. I think that they're going to have the president on, or the CEO, don't know which one, on tomorrow morning on CNBC. You might want to tune into it. It'll be first thing in the morning. I watch CNBC, Fox, Bloomberg, all of them. So you can imagine what I look like in the morning. It's crazy. Higher, and by the way, I turn on Motor Trend in between. I know you think I'm crazy. I have to get my brain out of it. I love automobiles. So I'll get myself for a half hour out of it and just watch a show. Sometimes they're reruns. I don't care. Get me away from the market. Higher high, lower low, not a lot there. Gold. This was not good for gold. One of the headwinds of gold is higher interest rates in the U.S. Now, it was interesting that the dollar fell today. I give that credit, but the gold couldn't respond to the falling dollar. Gold just went, huh? At least 2 more, maybe 3 more rate hikes on that dot plot. The shoulders cave in, the price caves in, the head goes down, and that's what happened today. Silver, probably going to feel some of that pressure too. Copper's different. Copper's counting on China. China. Are they going to do anything to get their property market going, to get the economy going? That's what the market is all about on this rally. Not about the demand for it. The coming demand is what the market's betting on. Then we get to BND and TLT, and come on. I don't want to be buying in this environment. Why would I want to be a buyer? They pulled the plug today. Now, admittedly, you went down to the Bollinger Band. I tell traders that's where you, especially when you're not embedded, yank money off the table. The dollar, to me, still bearish. Even the high rate didn't support the market today. That's a telltale sign. The Fed's going to go for higher rates and this couldn't rally? Now, I do think you're caught right here. And I've mentioned that to you, but you lost the embedded reading. It's pointing down. I wouldn't be surprised you get right to that Bollinger Band before you know what's going on. And tomorrow we get the European Central Bank announcement. Miss Lagarde at 7:30, whatever time, she's going to raise rates and probably talk very, very hawkish. So I don't think that any of the central bankers are ready to back away. 2 banks tried, they failed. Bank of Canada, Reserve Bank of Australia. They both went into pauses, had to come back. We went into a pause, and I think we were wrong. I think the Fed chair was wrong. I think he should have gone 25 points again, not let that inflation get up out of that fighting chair and come at you again. Don't look to see what your enemy does. Put your enemy down and keep him down. An enemy being inflation. I don't agree. You don't wait and see. What's that? To see the white of their eyes? You don't want them that close. One of the patterns that you're getting a lot of right now because of this back and forth with the Fed and what's working, not working, are outside days. They're typically a continuation pattern, but when they're lost within a certain period of time, they're a complete different pattern that says, the market's made a change on you. What do you do with that change? Where might the market head?
So I put together 9 video chapters. You follow what I do, you see what it is. Then as part of the course, you get to see my morning videos with today's action each day for 2 weeks, so you can really hone in on it. You get the charting software we have, you get the access to this, you're gonna learn. How do you get there? It's pretty simple. You move your cursor to the top up here, you're gonna get an icon. With that icon, you just give it a click, it'll take you to where the course is. Learn this, okay? There are a couple of easy things to learn on charts. This is one of them. You can knock this off on a Saturday afternoon. It's only 9 chapters. Go back and look at the charts and you'll go, oh, wait a minute, look at that. Interesting what that does. How do you get this? Simple. You go to our website, iraepstein.com. Click up here if that's not the case. If you go to Ira Epstein, go to the word education, away you go, and you can always call my staff. They'll work with you. I'm Ira. You have a great day. I'll see you tomorrow.